True or false, fact or cap, can you use the US tax code to get a G-Wagon for 50% off? And in order to test this myself, I bought a G-Wagon.
What's going on YouTube? This is Editing Tom from the future. While editing this video, I realized I made a major jump. I forgot to lay a proper foundation. Section 179 of the tax code, which I'm about to start talking about, past Tom is about to start talking about, is for business owners. So if you do not own a business, you cannot even think about taking these deductions. Also, I'm not your lawyer. This is not tax advice. All right, back to future Tom. Back to past Tom that's in a G-Wagon.
Q Section 179. What is Section 179? Section 179 is for first year purposes, writing off equipment that you bought in the first year that you bought the equipment. Now, what is equipment? Equipment's a very loose term as defined by the IRS. Equipment could be a forklift if you were in the construction business, or it could be a car. But not all cars are treated the same. If your vehicle weighs above 6,000 pounds, but below 14,000 pounds,
the vehicle qualifies as a heavy-duty vehicle under Section 179 and is therefore subject to exemptions.
And coincidentally, the G-Wagon falls into that category. Under Section 179, you can potentially deduct up to $1,040,000 of equipment. And as you might guess, a G-Wagon doesn't cost that much. So in theory, you could deduct the entire thing, or so it sounds, but it's not that easy.
First, we have to understand how depreciation is normally handled. Let's say I buy $1 million piece of equipment, and the lifespan for that equipment is 10 years. Well, under normal depreciation principles, I would depreciate that piece of equipment $100,000 every single year until the year 10, in which all $100 million would be depreciated. $1 million piece of equipment, 10-year lifespan, you pro rata depreciate that asset down. Before I begin, I am shamelessly asking you to hit that like button. Every time you hit the like button, it pushes the video out on the YouTube algorithm so more people view it, and our community can continue to grow. We just passed 195,000 people, and it is very, very heartwarming, and I really appreciate it. As always, my goal is to make content worthy of your time. So what makes Section 179 different? Well, essentially under Section 179, you're capitalizing the entire asset and putting it on your balance sheet, meaning your company has less in profits because they are writing off or deducting that entire expense. What type of property qualifies for the 175 deduction? And I'm going to break eye contact with you because I'm about to read a list. So sorry about that. Sue me. It's automobiles, computers, machinery and equipment, office furniture, signs, if the sign's movable, tractors, and trucks. And there are a whole bunch of conditions you need to satisfy as well. I'm not going to get into all of them. The most important one for the purposes of this video, because we are talking about a car, a G-Wagon, is use. In order to take a Section 179 deduction, you need to use that piece of equipment, in this case the car, at least 50% of the time or greater for business purposes. So I can't just go out, buy a G-Wagon for my law firm, and then never actually use it for law firm purposes. Now, like I said earlier in the video, there is a limit to how much you can depreciate off of 179 in 2020. That number was just above $1 million. And yes, while you do have to use the vehicle for 50% or more of the time to qualify for Section 179, that doesn't mean you're necessarily out of the woods. You take the amount of time you use the vehicle for business purposes and you apply that pro rata to the tax deduction. Let me give you an illustration of that. Let's say the G-Wagon cost $100,000 and I used it 100% of the time for my business. I never used it as a personal car. Well, in that case, I can write off all $100,000 of it in my tax deduction. But let's say I use the G-Wagon only 60% of the time for business and 40% of the time for personal fun. Well, in that scenario, I can only deduct $60,000 or 60%. So let's dissect the original claim. Can you use the tax code to essentially get a G-Wagon for 50% off? Well, not really. At best, 40% off, right? Because that's generally the highest tax bracket. So if you depreciate the entire vehicle off of your taxes, you're essentially saving 40% on your money. So it's really closer to 40%. But as I just explained, it's really more complicated than that. if you're buying a G-Wagon or a heavy SUV, you're probably going to be using it for some personal purposes. And the last thing you want to do is lie on your taxes and get in trouble. But there is a reason why business owners are buying SUVs over 6,000 pounds. And on top of that, there's a reason why that a lot of automakers are literally making their vehicles 6,001 pounds. If you don't believe me, look it up. There's a whole bunch of vehicles that I'm gonna put right here that qualify for the 179 heavy vehicle deduction. All right, back to G-Wagon, Tom.
This isn't my car. This is my friend's car. I came to his house so he could let me film in it. If you know me, I don't really care about cars, and I probably couldn't afford a G-Wagon anyway. That's it for today's video. Please make sure you leave any comments, concerns, questions down below in the comment section. Make sure you hit that like button and subscribe to this channel if you want to join this community. We're growing like crazy. I really appreciate the support, y'all. I'll talk to you later. Thanks for watching.